Hey, it's Bill Gross, the LA probate expert, with my weekly real estate market update. And mortgage rates are up, but they're down by a record amount at the same time. How can that possibly be? Well, it isn't, and I think we're all being played for fools. So I've been in this real estate industry since 1986. I started in lending and then did both real estate and lending and became a realtor full time. But what has always been true is that consumers are always confused about where interest rates are. And it makes no sense at all. At their core, most mortgage rates for purchases of residential property being sold to Fannie Mae and Freddie Mac is not any different than buying gold or silver. There's a spot market price for those things. We're buying Tesla stock. There's a stock price for Fannie Mae loan. Maybe you pay a little bit higher because of the loan to value or a credit score, but basically the rates are not that different from lender to lender. It's that you might deviate. But I think that lenders make it needlessly confusing on purpose, and I'm going to show you why. Because these loans are being sold to Fannie Mae and Freddie Mac, they start kind of the misinformation campaign from the very top. And what do I mean by that? Well, let's take a look at a recent article that I saw in, of course, CNN. And they talk about the mortgage rates see the largest decline since 2008. Now, maybe that means the largest 1 week decline. They don't really explain what the largest decline was. They talk about where they got their data was from the Freddie Mac weekly survey. So in 1 week, they're saying it went from 5.8 to 5.3. We're going to talk about how misleading that information is if that's what they're relying on. They don't really come out and say that specifically because they're anxious to get a headline that gets you to their page. And then from there, they're going to send you some advertisements. If you take a look, though, the quoted report is Freddie Mac. It sounds very authoritative, but I think at its core, it's really more misleading. Here's the interest rates, for example. This is the Fannie Mae, the Freddie Mac rate is the green rate, 5.3 as of Thursday. That's what CNN was reporting on. But in reality, this number is from mortgages in a survey collected by Freddie Mac up through Wednesday, the day before. And it was from the prior Thursday to Wednesday that Freddie Mac said, send us whatever rates you quoted. You closed loans on last week. Through Wednesday, we'll put the data together and we'll issue a report. And then we'll give it to people like CNN report on Thursday. So by definition, that data is already 1 day late to 8 days late, depending on which lender it is, number one. Number two, it's not scientific. They don't require the same lenders to respond each week. It's whichever lenders respond get reported. That could vary. Some might be competitive. Some might not be. Number three, different lenders have different focuses. Some lenders do more refinance, no-cost business where people pay no points. Other lenders do more purchase business where a buyer might pay 0.5% or a point to lower the rate. Some work with builders that pay a lot of points to lower the rate even more. So the variance in the surveys from 1 week to the next can explain why Freddie Mac is reporting rates going down when the actual spot rate, this is the rate that Fannie Mae and Freddie Mac are offering to buy loans each day from lenders, that's publicly available, that actually went up. Why would the survey go down and the actual rates going up? That's like saying people thought they bought Tesla stock for lower prices last week when Tesla stock went up. Makes no sense to report what people thought. What it makes sense to report is what actually happened. But Freddie Mac has this survey, and CNN, being the stooges they are glad to report that. Then what happens from there is CNN, you'll notice, well, let me tell you, this becomes like a three-card Monte game. Three-card Monte is a classic con game where it's not just the dealer who fools you with the cards and you're confused. What you don't know is that the other people around you, the other guests, the other audience members who seem to be on your side are really in on the con with the con man and often will get paid a percentage of the victory or the proceeds they con you out of. And I'm going to tell you that I think Freddie Mac and CNN and others are playing three-card Monte with most buyers in the mortgage rates. What do I mean by that? So here's CNN. They advertise the mortgage rates see a decline. I can imagine you might say, wow, let me see how low rates are. How convenient. right there is Lending Tree. Now, it's not a lender. It's not Bank of America or Wells Fargo or Citibank. It's Lending Tree. And they'll tell you, oh, well, we shop rates for you so you don't have to. And we're going to get the best rates. And they just put those rates that they find. And they have 5.25. Wow, their rates are even better than what CNN quotes. I think I'll click on that. What happens? Lending Tree, in turn, takes you to their list of lenders because they're not a lender. And there's really no science to that rate they quote. But when you look at the list, what do you see? One lender at the top is the lowest, 4.38, 4.5, 5.38, 5. Wow, that looks like a great rate. And they have a range. Oh, okay, they're being conservative. Up to 5.13, still lower than 5.87, 6.63, 6.9. That looks like a good deal. I'll shop on them and get their offer. Now, smart, educated buyers might say, well, there's an APR, and I'll get back to that in a second. But most all buyers who click on the screen are going to click on AmeriSave, thinking they're the lowest rate. Number one, they might not be honest. We know the Fannie Mae rate today, based on the day that I just clicked on it, is actually 5.84. So no matter what AmeriSave does for your mortgage, you're going to have to get that loan sold to Fannie Mae or they're not going to honor the lock-in. Some companies went out of business in the last month by selling loans and, quote, locking them. They couldn't deliver the lock, so it was just easier to go out of business, change their name, and come back with a different name. Imagine you clicked on AmeriSave. You get rates. Well, no. What happens is, I'll do it again. I did it before to test this. You're going to get asked a bunch of questions. What kind of property are you refinancing? A home. What's your zip code? I'll put in a zip code. They're going to ask you, what's your first mortgage? I'll just click continue. Do you have a second mortgage? We'll put no. We're going to ask all kinds of questions, including they're going to get my tracking cookies. They already have in this case. So they're going to chase me around the internet. And before they give me a quote, they're asking for my name and phone number so they can bug me mercilessly and or sell my information to other advertising companies. I still don't have their rate, which I know the rate they said they're going to give me, 4.38 to 5.3. There's no way we're going to get that rate. However, if in fact you did get the rate from them, here's the fine print that's almost impossible to read. Now, okay, let's go back to AmeriSave's website. Oops, wrong one, AmeriSave. Let's go back to the website. Pretty website, nice house, easy quotes, accurate quotes, not estimates, nonsense. But in small print, towards the bottom, you're going to find, if you go to rates, where are we, rates? You know, it's so funny. Even to find the rates again is like impossible. Okay, click on the rates. Again, this is where you click to get a bunch of questions asked and they can track you down. Scroll down, fine print. The advertised rates, blah, 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 blah. And they're going to put in here, it's so funny. I guess I have to dig a little deeper. But this is what I copied from before. Their advertised rates have discount points of 4.29%, meaning that you pay 1% origination fee, presumably, the normal closing costs, and an additional 4.294 points to get the lower rate. On a $300,000 loan, that's $12,880. Of extra just so they can appear lower here. That's what the APR comes in. The APR allows them to take those points and pretend as though you're paying them over a 30-year period. The average now that's a totally misleading statistic that the government allows because the average homeowner has a house for 5 years. A loan for 5 years. So of course, the more points that they predict you would choose, which is a joke, makes their APR look better than the competition. But again, even still, there's no way you're going to get that rate today. What happened was AmeriSave either purposely or accidentally didn't update the rates on Thursday or Friday, so the rates are ridiculously low, will never be delivered on those terms. So you have the APR fake out, you have the discount point fake out, you have the Lending Tree kind of will compile the best rates for you fake out. You have CNN misleading you from the point the rates dropped when they didn't really drop. And then you have Freddie Mac playing along with that. Again, as you can see, in my estimation, all of this is just a con where you have a dealer, which is, I don't know who that would be, the government or your lender. You have all these other parties, Lending Tree and CNN and other people playing along, fooling you as though you're actually going to get the best rate possible on your mortgage. So what do? What I always tell people is find the best service provider and make sure their rates are competitive and ask them to upfront tell you they'll be competitive. And when it's time to lock in, that's when it's critical. You don't want to shop at your rate to lock in a rate. That's when the rates have to be competitive, because AmeriSave knows, and all these other lenders know, they can quote you 0%. You can't get the loan today. You haven't given them the tax returns, bank statements, they don't have an appraisal. They're not locking that rate in. And if magically you get everything done on Monday, they'll go, oh, Shazam. Rates have gone up to, and they're going to show you the market price that we all buy rates at today, 5.8%. So what's the best thing to do? Find a professional with a track record of success, with a track record of getting the job done at competitive rates. Get a recommendation from me or somebody else of somebody who's great, who's going to get you what you want. Either get your rate ready to lock in on a refinance, or in a purchase, ready to buy the property, ready to sign the contract, or sign the contract, and you have contingency periods. Then verify the rates are competitive. Any lender I recommend will be great service and be willing to be competitive at the time you actually have to lock in the rate. They're not going to match Lending Tree's pretend rate, but they will be competitive at the real market rate. So if I can help you, please call me, text me, or email me. I'm Bill Gross. Siri has to jump in as well. Everyone wants to jump in on the mortgage rates. But either way, make today your best day ever. Thanks so much.